I am live. How you doing, friends? Coach Ernie here, and this is the 0 DTE and FatTail or tail risk morning market analysis. I am now folding that in to the market analysis as it is a full-fledged effort and campaign that we follow. What are FatTail trades? Well, they're looking for convexity or extreme risk. And as I said right from the very beginning of this year, I expect that we're going to have a lot of these type of events. It's not really any different than anything that we've ever done. 0 DTE is in fact a tail risk strategy. We're just extending it out to longer DTEs. And so I'm going to provide for the first time a look at our AI. It shows exactly what our setups will be and what the situation is, why we're taking the trades, what campaigns that we're running, and so forth. And if you'd like something like that, trading with AI, I'll tell you, there's really nothing like it. Go to the link down below and click on our Skool environment for FatTail, and you'll be introduced to it. It's really unbelievable. And trust me, I am being totally understated when I say that. So anyways, let's get on to what's going on this weekend. By the way, I had a great weekend, by the way. I was, the wife and I went to a wedding all weekend down in Westport, Mass. It was wonderful. So let's get started. So the big story, in my view, is this current lull. The market has lulled itself into kind of a false sense of calm as the VIX has compressed back under 20, or is right at 20, but not from structural stability, but really from tariff whispers and the Fed narrative and their soft pedaling. But this isn't an all clear. It seems calm, calm before the storm. It's really prepping is cheap zone. What I mean by that is when volatility starts getting compressed like this starts becoming an opportunity for fat-tail traders. Things are cheap, calm before the storm. When things do hit and you can get into those cheap prices, you're going to really bank that. The moment when volatility is underpriced relative to lurking macro risk. That's what I mean by prepping for the cheap zone, or prepping is cheap in the zone, or this is the prepping is cheap zone. I don't know. I got to fix that. But anyways, this is all about traders who thrive on convexity. This is an asymmetric moment to seed tail risk trades, right? So if you're one of those people that says, man, I never get that big win, I never get that big move, it seems like I'm always, the market's outguessing me. Of course, you can't guess the market. The only way to grab these trades is to set intelligent seeds there or little landmines and wait for them to hit. The secret is putting on trades that are cheap enough and well positioned to be able to make those big trades. And so again, that's what we do in our Skool community, FatTail AI. So go down below, click on it, join it. It's really incredible. For example, one of our members put on a trade not too long ago, $130, FatTail seed, returned $6,200. Trades in this environment, whenever we see a little volatility spike, can easily return $1,500, $2,000, $3,500 on a $50 bet. All right, so that's what I'm talking about: capturing those big moves for short money. So the question isn't if the volatility storm hits; it's just when. And the fat-tail trader doesn't have time, or the fat-tail trader doesn't time the wind. We can't time the wind. They build the sails. Oh, I like that. Who wrote that? The fat-tailed trader doesn't time the wind; they build the sails. That's so apropos coming from where I came. This wedding right on the water and everything. It was pretty cool. All right, so markets are seduced by a fragile sense of calm. After a 10% correction, the S&P 500 has rebounded, and it's kind of sort of ground its way down over the weekend. Not hugely, but a little bit. But this bounce lacks conviction. It's a low liquidity grind held together by whispers, a softening of tariff rhetoric, a Fed signaling just one rate cut, and I don't think the market really cares about that. Or I'm sorry, they care. What they don't look at that favorably. So we've got that under the covers. And currently, there are no new headlines to rock the boat. The VIX has compressed back under 20, a classic symptom of volatility suppression, not the resolution of underlying risk. This compression is absolutely deceptive. So beneath the surface, these tail risk factors remain unresolved. The tariff squall is a controlled burn designed to create uncertainty rather than resolution. The global currency risk lingers as the U.S. postures for dominance amid competitive devaluations. That's happening big time. The Fed's hawkish pivot is a latent volatility trigger. I have no idea where the Fed comes from, but it is primed to capture or catch the market offsides once it realizes the easing cycle is not as generous as priced in. There are global risk events, geopolitical frictions, tech sector earning misses, or liquidity fractures remain low frequency but very high impact. This is all stuff that's sitting under the covers. This is the VIX whisper zone. This compressed volatility regime is not a signal of safety, but a setup for the next snap. I'm saying it here, right? It's the window when tail risk is cheap. This is the time. People say, buy low, sell high. Well, how do they do that? They don't know. They don't do that. They have no idea what low is. And besides, the price is high, right? I'm not looking for a high price. We're not, traders that way. We're looking for volatility. We are VIX traders. We are convexity traders, right? So in this window when tail risk is cheap and the market complacent, it's vulnerable to a shockwave, and the asymmetric opportunity is now. Seed tail risk convexity while the market dozes, because when it wakes up, the cost of protection will skyrocket. Do it. All right. So now on to our zero DTE trades, and I'm also going to show you a report from our AI of all of our tail risk trades and what it does for us. I mean, every morning it provides a comprehensive report of everything that's going on, all the macro events, all the things that are under the covers, what trades that are viable, both zero DTE as tail risk. It's really cool. All right, so what we need to do is go on to I don't know if this is going to go there. The charts? No, that's the FatTail report. Let's go on to the charts first. And that's not the chart I want. Hey, it's Monday morning. What do you want? All right. So as I said, VIX is just under 20. So for zero DTE trades, we're looking 25 to 35 wide. The big ass fly currently is sitting right at about 20 wide. So we're right here, right in the middle. So 30 wide is, that's seems to be about it. I'll show it to you. Go to the big ass fly. We got a lot of market reports this morning too. So I'm sorry, economic reports. The economic calendar is filled. But see, there's the big ass fly. Let's go back to the economic reports. We need to go to Safari for this. And I know that is the report that I wanted to show you. But let's see. We go to finance. There it is. All right. So, this morning we don't have anything pre-market open. But we do have manufacturing PMI, ISM PMI, which is very strong, 10 a.m. So the big ass fly probably won't come into play in the morning. You might want to look at it after the market opens, but I think the opportunity starts diminishing. So that's why originally the AI said, well, you might want to look at the big ass fly because of these reports. And I said, yeah, but it's happening after the market opens. And so, I mean, you can give it a shot. I would say you're on your own there. But we have Powell speaking at 1 p.m. That's got to count for something, huh? So yeah, today might be one of those undercover moments for these seed trades. So maybe a trade that you put on this morning, looking for, hopefully it's going to happen within the next week or 2 weeks. It might be today. You don't know. So let's go back to the charts. And we'll continue our 0DT analysis. Currently, directional bias is bearish today because we are well under the moving average, as you can see. But, you think this looks like maybe it's consolidating and maybe it's going to continue up. I don't know. I'm just saying, look what happened on Thursday and Friday were both some big surprises, although Friday rebounded a little bit. And let's go on to the market structure. We're sitting inside the top knot node right now. For a while, we were on top, and I thought we might blast off, but now we've slipped under it. So we're looking for 0DTE bearish trades that will be bouncing off of the top of the node and then moving down. So we'll see how that works out. And let's take a look at the big picture market structure. See, here's the top knot node right up here. It's quite a bit of volatility well. I'm going to just make this one a little bit lighter there. There we go. And so we can see this is the node right here. It's pretty impactful, but we're under it. And what looms below is a low liquidity area that could pull us down. So something that the Fed says today could easily pull us right down to what I call the freedom node. That's the freedom node down here. I like giving it names because when I talk to the membership, it's easier to refer to things as nodes with names, monikers, rather than saying, oh, it's at this level and that level, because we look at it every day and we know where the levels are. We have our charts all set up, all marked up. So it's a lot easier to talk about it in terms of names. So yeah, that's the freedom node, that's the top knot node, and then these nodes up here I call the stairway to heaven. We haven't got up there yet. We tried, but kind of like Joe Biden, we fumbled. Oh, that was mean. Anyways, there we go. Let's see. Is there anything else to talk? Oh, we wanted to go to the report. Safari. All right. And here's the report. So this is an example of the type of stuff that we get. It will talk a little bit about the volatility regime, where it is, what the market's doing, what are our FatTail plays, seed tail risk now, it's telling us. So it's flashing, hey, now's the time to put on these type of trades because now's the opportunity. They're super cheap, and you could get ahead of a big move. And then the type of trades that we put on, as you can see, all of our different strategies are here. Here's the 0DTE. We call that the tactical trade because it's every day and kind of in the weeds. It's saying skip the bath, right? So it knows that because we don't have any morning market reports, it's saying, hey, don't do that right now. And it's not necessarily expensive. It's mostly because the market reports are happening after the market opens, so you're going to lose a lot. It will be expensive by the time the market opens, is the point. The convexity stack is our shortest term FatTail trade or tail risk trade. It's 3 to 5 DTE with the sigma drift 5 to 10. These are also used, the convexity stack, we do use butterflies, but we're looking for trades that are only 25 to 50 cents. 50 wide trades, and we are only paying $50 for them. So these could potentially be big payers if we get something out of the Fed today, or in the next few days, because a 5-day trade that'll bring us all the way to Friday. So anything could happen this week. And when we put something that far out of the money, you think, it's never going to hit. Well, that's not the point. It's not that it will never hit. We know that one of these will hit. They hit about on a frequency anywhere from 1 to 3 or 4 times a month. And we only need one to really make our entire month. That's it. So Sigma drift is a little further out, 5 to 10. The focus is on the GDP. Yep, tariffs, rate path. So these things can also produce big trades. And then these are sort of the more longer term portfolio protection trades that we put on. Seed insurance. It's like insurance premium. All right. But now's the time to put that stuff on. Insurance is cheap. And the structural map. Okay, so it also does a report on. Yeah, see, it also knows it doesn't know the name. I got to tell it the name of the nodes, but it tells us where the nodes are, and then that there's just below that there's low liquidity. So it's asking us to look out for that. And then the macro report and what we're looking for. So this is what we get every day, every morning, or anytime I want, quite frankly. From the AI. It knows exactly what's going on. All right. So let's go back to the big head. And there we are. That's our report for today. This is the time where you're putting on those trades. Not when volatility is going crazy and you're chasing that fat tail. You don't want to chase it. That's absolutely not optimal. You want to get where convexity lives, where the curve that goes like this. You want to be down here, right here. You don't want to be up here. You want to be down here, not up here, down here, so you can get up there and take it. All right. So there you go. That is today's report. Thank you very much. Hope you all have a great trading week. Coach Ernie is out.